Dear wonderful people of the internet, welcome back to the Future of here at Nordic Fintech magazine. Today we're talking about the future of trust. So who do you trust, and most importantly, why? Trust is an essential lubricant for social interaction. Children trust their parents, students trust their teachers, and employees, for the most part, trust their employers. And while there are always some bad apples amongst us, we generally consider people to be trustworthy to a certain extent. But if you want to know what the impact of that technology is having on trust, make sure you watch till the very end of this video. You see, modern society has existed thanks to the development of trust in centralized institutions. Historically, as the state power became more centralized, it became possible to outsource trust from individuals to institutions. Today, for society to keep running, we need to trust in the institutions that enforce the rule of law. And when things go wrong, there needs to be a legal path that we can enforce to reestablish that trust. But in this channel, we care about how these things relate to finance and banking, so let's put things into context. Let's say, for example, that you want to buy a house. So you go in search of your dream home, and you find a house on sale that you fall madly in love with. You could just go to the person selling the house with a whole bunch of cash, ask for the keys, and sign the papers. But you also want to make sure that the other person doesn't run away with your money and the property titles, and conversely, they want to make sure that you are not paying them with funny money. So, for this to happen, you have to enlist the help of a third party that acts as a guarantor, so you ask your bank to sit in the middle of that transaction to keep everyone honest. Now, the bank does this through a process called an escrow. Through it, the bank receives your money and holds the property titles, and once the transaction is completed and all the paperwork has been signed, it releases the money to the seller and you are the official owner of a new property. Now, this mechanism ensures that neither party is tempted to run away with their part of the sale. However, it is a very slow process, and of course it generates fees that the bank is only too happy to charge to both parties. Now, since the credit crunch of 2008, Western democracies have experienced a crisis of trust in their institutions. The system has been abused by the whims of people with power in government, in central banks, and in the financial sector at large. In 2020, the British market research company Ipsos Mori did a survey where they asked respondents if they trusted different professions to tell the truth. The results show that the most trusted profession is nurses, with 93% of people trusting nurses to tell the truth. In second place came doctors, with 91% of people considering them to be trustworthy. Now the picture becomes bleak as we look further down the index, where we see that only 44% of people trusting bankers to tell the truth, and even more alarmingly, a mere 16 and 15% trusting government officials and politicians respectively. But wait, it gets worse. Another poll done by the same company asked nearly 20,000 people globally how they felt about their bank's trustworthiness. 32% of respondents strongly disagree with the statement that says that banks keep their promises. A further 39% disagree with the statement that banks are open and transparent, and a whopping 52% of respondents believe that their bank would take advantage of them if they could. Now, this combination of declining trust in institutions and the rise of trust-enabling technology is driving momentum towards a paradigm shift. Now, let's shift our attention to what the disruptors of the monetary system are actually saying. Specifically, I want to make reference to a paper that is shaking the foundations of our monetary system. This paper was published by Satoshi Nakamoto in 2009, and it was titled Bitcoin, a peer-to-peer electronic cash system. In this paper, Nakamoto stated that what is needed is an electronic payment system based on cryptographic proof instead of trust, that allows any two willing parties to transact with each other without the need for a trusted third party. So you see, technology is pushing us further and further into the emergence of the trustless society. In the trustless society, transactions will depend less and less on contractual agreements and more on self-verifying and self-executing code. This means that in the next 5 to 10 years, we're going to see the locus of trust shift dramatically from centralized institutions to individuals, and from elites to people like you and me. So how will this happen, you will ask? Well, this is going to be achieved thanks to something called a smart contract. Smart contracts is a funny term, as they are neither smart nor are they actual contracts. They are essentially a set of instructions designed to follow an if-then logic. If event 8 happens, then do action B. Smart contracts essentially perform three functions. They store rules, they verify rules, and they execute rules. And they are essentially secure in the sense that they use cryptography to stop people from altering the records. They are transparent as everyone can see on the blockchain what the smart contract is and what it's being used for. They are also third-party free as they don't need a middleman like a bank or a government to verify its execution. And they are autonomous as they self-execute and accurate since they don't rely on the gray areas of language and the meaning of words. So, to better understand what a smart contract is, think of a vending machine, which uses a very simple form of a smart contract. It goes along the lines of, if you insert a coin and press the button, check that the credit is sufficient, and if so, release the drink. And if you're lucky, you might even get some change. Now, smart contracts are enabling a new type of financial service called decentralized finance, or DeFi, which lets people lend and borrow money without the need for a bank. Instead, smart contracts use a blockchain as a registry for the transaction and to execute the code. If you want to know more about smart contracts, we recommend that you check out this video by Max Maher, who does a tremendous job at explaining it in very simple words and terminology. There are examples of organizations that are already experimenting with this type of services. For example, the Dutch bank ING has co-created Finality, which is a blockchain-based trade settlement system that uses smart contracts. Ubisoft, the gaming company, is also crafted specially designed smart contracts that allow users to own, transfer, and claim rare non-fungible tokens or NFTs. By the way, NFTs is another huge topic that's been gaining momentum, and we will be releasing a video entirely dedicated to the world of NFTs, so make sure you subscribe to the channel to be notified when our NFT video comes out. Now, how could DeFi services and smart contracts impact you? Well, think for example about your travel insurance policy. One rule of the policy might say that the policyholder receives compensation if a flight is delayed or cancelled. This rule can be installed into a smart contract, which means that the policyholder doesn't have to rely on the insurer to hold up their end of the bargain. If your flight gets cancelled, that information gets added to the blockchain, which triggers a rule in the smart contract. You then receive compensation automatically and avoid the entire claims process and any potential friction. Sounds exciting? Well, perhaps. But consider the fact that everything I've said so far about smart contracts relies on a pretty big assumption. And this is that to benefit from this new technology, pretty much every aspect of your life will have to be recorded digitally. For a smart contract to work, there needs to be a digital record of your purchases, your travel plans, your day-to-day activities, and other events that relate to you. Leaving aside the obvious privacy concerns associated with this, code errors in smart contracts are still one of the biggest challengers for wider adoption. A November 2020 report by CipherTrace found that around $10 million are drained from DeFi contracts every month. To help minimize the risk of this, third-party firms are offering code auditing services for smart contracts. This suggests that perhaps trust is not being removed, instead it's just being transferred from the individual to the code and therefore to the coders. Technology is always exciting, but there are always things to consider before we run indiscriminately to adopt innovation. For example, could distributed trust lead back to centralized power? Take Amazon, Alibaba, or Facebook. They might have begun as ways to democratize commerce and information, but conversely, they have become centralized behemoths in control of our data. It is also true that for most of us, it's very difficult to understand legal terminology. Will these get even worse if we have to grapple with code? And perhaps the most fundamental question of all, do we really want to live in trustless societies whereby the magic dust that enables us to relate to each other is replaced by cynicism and distrust? But these are of course questions for another video. Thank you so much for watching. Please subscribe to the channel for more videos that uncomplicate finance here at Nordic Fintech Magazine. And you can also check out our website for lots more thought leadership at nordicfintechmagazine.com. See you soon.